M&A is a strategy. A group of buyers I know, they are buying sunset industry purposely to get higher valuation. The end product or the massive is the model, the business model. I know, yeah, you're good at what you do, but that is you. It's nothing to do with your business value. The other one for the value is intangible value, which is, do you have a brand value? This will totally change anything to do with product.
Hi everyone, welcome to Asia Business Owner Podcast, ABOS for short. With the changing economy, especially after pandemic, do you ever wonder why business lifespan is getting shorter? Do you ever wonder what causes it? Are you one of the business owners who are in the midst trying to figure a way out? Or are you intending to start your own business venture believing that everything will work out but somehow you feel something is missing? Or do you want to start a business however, you do not know what to go for? If you have all these questions on the list that I mentioned earlier or many more that I have not mentioned, then we are here to fill the gap.
Hi, I'm Joe.
And I'm Ben. Before we start, we would like to wish everyone a prosperous and fruitful year of the horse. 恭喜发财，马到成功. Okay, today we have a guest who many SME view as God of fortune. Okay, since we are at CNYP right now, okay, whether you are planning for expansion or an exit plan for your company, then he can be a good help on merger and acquisition. So we have Jeffery Quek to share with you more in details. Hi Jeffrey, we would like to do a simple introduction about yourself.
Okay, hi. Thanks, Ben and Joe. I'm Jeffrey from TED's Business Coaching Consultancy. What we do is we are specialists in SME. We do business model transformation, and along the way, we will improve your valuation so that you're ready for fundraising or for sale, basically.
Okay, now I know that a lot of companies have this myth about M&A, which is merger and acquisition. Majority feel that it's probably meant for multi-million revenue company. Is that true?
Okay, the quick answer is not necessary. Because what matters most is the true inherent value aligned to the buyer's objective. It's not about the absolute valuation. M&A is a strategy. It's a strategy for a few strategic reasons like exit, succession, consolidations, or even what we call acqui-hires, meaning that you're acquiring certain talents within certain organizations by acquiring the company. So M&A can happen
There
to
must be a
any
certain
scale
value
or
as
size.
well, right? Right, but there must be a certain value of the
in terms
company
of
as well,
the
right?
financial value you're referring to, definitely, of course, it has to be on very basic level, fundamentally positive or profitable. Those that are loss maker, likelihood you'll get discounted in terms of value. Then, for example, let's say loss-making company, it may have value. You might have heard of this famous startup budget airline that acquired an old airline for only $1. You know, if you have heard of this, I don't mention the name. It's somewhere in Malaysia. They are founded from Malaysia and then they grew. Yeah, so
$1.
that old company wasn't doing well. Yeah, so it's taken over at $1, but it's an airline. But it has value, basically. So as long as you have an inherent value, the absolute valuation can come into support. But ultimately, do you still have the inherent value still for the investor or buyers to be interested to take over you? That's all.
Jeffrey, maybe
It's as good as
for the benefit of for the benefit of our listeners, right? Can you define what is inherent value?
Okay, back to the airline. The airline probably still have some old asset like airplanes, the system, there are still staff, for example, to be taken over. So these are what we call tangible or intangible assets to be acquired. Nobody will acquire empty company or shell for no reason. So there must be something to be taken over, basically. That this investor or buyer will probably know what to do with the resources after taking over them. They will have probably the expert, the network, or even the capital to transform, to scale, to grow, or to do whatever they want under their agenda. Yeah. So a quick way is maybe something closer to our heart is like property, for example. Let's say there's a old rundown freehold shop house, but prime location, Orchard Road. But it's rundown, nobody will live inside, right? So to most people, there's no value. But to a guy who know how to develop, how to redo the interior, know how to tear down and rebuild, this particular unit or asset has a value, basically. But you must know what you can do with it to maybe flip and make more money subsequently.
So it's something like a potential that investors are looking into for
Yep.
this particular company that they can actually like a potential golden goose, something like that.
Yeah, correct. Always remember, be it a consumer buyer or a business buyer, we are all investors. We have investors mindset. We are investing into something. That's why there's an exchange, basically. So there must be something we want to gain. Nobody will buy a dying asset or a sunset industry for nothing, for no reason. Like for example, there's a group of buyers I know, they are buying sunset industry purposely because they have a certain strategy and capital back project that they can actually execute to turn around the sunset industries that they're going to acquire. So there must be, likewise, repeat again, inherent value that the investors are eyeing at and very interested in because they have certain projects or strategies coming up.
Oh, okay. I think this is going to be very interesting. Now, we talk about the value that you mentioned earlier on. How does SME qualify for the criteria? Is there any certain criteria that you will be looking at?
Okay. Yeah. Okay. Do you want the basic version, which is boring, or you want the juicy secret recipe kind?
I go with
Maybe
juicy
I give a
one.
quick one. The basic one. Fundamentally, basically, is, there's no hard and fast rule, but it all depends on buyer's requirements. Okay. But there are 4 non-negotiable basic facts that you must be at least have intact before a buyer or investor is willing to take a look at you. So, number 1, well-documented financial records for at least the past 3 years. At least, if not enough, 5 years. 2, cash flow predictability. If your business haywire, there's a chaotic pattern of your cash flow, then valuation is very difficult to determine. 3, do you have a well-established systems in terms of operation? And 4, do you have a proven management beyond the founder? So these are the basics. Okay. Now, then the juicy part. How do you fetch a better or a good valuation? That's where the juice comes. Basically, I have my proprietary system. It's called the Massive, MASSIVE, ROI system that I developed as a comprehensive guide for even buyers to be able to use as a checklist to follow when they are buying. So sellers, of course, on the opposite side, will be able to use it also as a checklist to determine whether they can fulfill what the buyers want. So it's a two-way thing. So to get higher valuation, the end product or the Massive is the model, the business model. Is it something interesting or boring? Or is it something of a sunset model, or has it evolved already? So your business model is the first priority. Even sometimes buyers don't understand this thing about business model. They'll say, I want this, I want that. It's very fragmented. But coming back to the real science of it, it's actually all about your business model. And pegged to the model is, do you have a management and team to support this model in an aligned manner? But if you have a team that don't support your model, it means this business is not running very well. Confirm for sure. But if you have a good model and you already establish a good system, which is managed by a management team or a normal team, for example, then it looks like a very beautiful story for the investors to take over. So that's first M. A, autopilot. Do you have an autopilot system? Be it full or semi-autopilot run system. It doesn't mean IT system. Most people when asked about their business model, they say, oh, I got this IT digital software installed already. So I've transformed. But most people misunderstood that IT is just a tool. It's nothing about your model. So a model once in place is a very beautiful, conducive, and integrated whole that makes everything run like a smooth engine. So in most cases, especially in the SME context, sometimes major decisions still need to rely on the owner to come in to do the work. Without the owner, the whole organization may flop. So autopilot. Next, the first S, sustainability.
Sorry to jump in, Jeffrey. So this autopilot part, I think, is very interesting. So there's one question
Yeah.
that I like to ask SME owners. Right? It's like, what will happen to your business when you take off for 3 months for holiday?
Yeah.
So if
This is
they don't have autopilot, if they
in
don't have
most contexts,
autopilot,
of
then
course,
it's going to be
yes.
disaster.
Yeah. Realistically speaking, of course, we as investors or when we approach business owners, we are willing to take the huge punch of salt lah. That say, okay lah, you're not full, you are maybe semi-auto, it's still not bad, good enough to consider. Because most investors or the buyers, they are from more established or accomplished businesses. They will know how to continue to make it better from then on. But the worst are those who say, like I don't want to quote again. There's some specialists that I was talking to in the medical industry. I asked him, so yeah, how's your business? Wow, I'm the best. Business will not do well without me. So these are the medical professionals' pride, which is to us investors and buyers is not a good news lah. So I buy you, you exit. What happened to the business? There's no value left, no inherent value anymore. You get what I mean? So I know, yeah, you're good at what you do, but that is you. It's nothing to do with your business value. So whenever we present, sometimes you guide the owner to say the right thing lah. Okay. So yeah, coming back to the massive right model, the first S is sustainability. It has got to do with the characteristics of the business, the industry, or the type of customers that you serve. A good example that is very common is the characteristic is of the business transaction, for example. Is there capability for recurring income or revenue for the business? That's one of the aspects in terms of sustainability. There are many aspects which we probably next time then we share more. The next S is scalability. Are you scalable in a vertical or horizontal manner? Are there potentials for that? Or in terms of market outreach, are you just purely local, regional, or global already? So all these will help to factor in your valuation. A quick example is a restaurant group that I happen to talk to. They were sharing me that, oh, other than having a physical restaurant, he already have ready to eat, ready to cook products. So I said, wow, impressive. Not many restaurants, especially during COVID period, have that. So I say, what have you done with that? Oh, he has distributed to supermarket in Singapore. Well, that's local, right? But he has also exported to regional countries like Japan, Hong Kong, Korea, and China. I say, wow, that actually at least can improve your multiplier by at least 1 time more. So that is market outreach, okay? So scalability. Then coming to the I, okay? Innovative. How innovative are you and how future relevant is your organization, your offers, or even your model? Or like now, this era, we're talking about AI, right? Artificial intelligence. So maybe are you even AI ready or AI equipped already? That probably can add on some bonus point to your valuation. Then coming to the V, the value. There are two parts to value. One, tangible value. The other one is intangible value. Tangible value means your financial health. That means all your finances, all your accounting. And the particular number that we're always interested in is the EBITDA, EBITDA. Okay, that's the financial ratio that we will always be very interested to look at. The other one for the value is intangible value, which is Do you have a brand value? Do you have a unique value proposition offer? Or do you have some trade secrets that other in your trades don't have? That's value. Okay. Now, E. E will stand for exit timing. Maybe just a quick one for the fun of it. When do you think is the best timing for a SME boss to say, I want to sell? With Ben and
When he
Joe,
don't need to
you
sell.
try.
When
When,
you're at the best of your time.
Best, right?
But
Ripest, right? The
yes.
banana, the ripest, right? Or juiciest, right? Sweetest, right? Now, you'll be surprised when I say this. When you're at your ripest, means the market probably already conquered 100% by you already. Is there any more room for the investors to progress? It's very difficult because it's already saturated or stagnated already. So what we will usually do or provide for investors and buyers is a room for them to still grow and progress after takeover. So we sell not at the ripest, but about to peak or about to ripe. Then the investor can see a future growth and scalability potential. Then you can probably fetch a better valuation. Understand? So exit timing is
I have a
very
quick
important.
question.
Yes.
All right. So usually when entrepreneurs, right, before they start up, right, do you advise them to have an exit plan before you even start the business, or is it vice versa?
Okay. Yeah. For most SME owner or even staff that I've met so far, my advice to them is, boss, always start with an end in mind. Okay. Well, why do I say that? Because a business model or valuation is not something that will happen overnight or suddenly. It has to be built. A good model, good financial track records are something to be built towards too. But without an end in mind and then subsequently a strategic plan to achieve that goal, everything is just a gamble. So that's why a lot of SMEs, when they're about to sell or even raise fund, they are all not ready because their model is not there, the finances not there, the operation, the system, everything is all chaotic haywire. Like what maybe Joe just mentioned, you're not ready at all, and then you want to sell. So the key now is um, always start a business with one, build a business model matching your desired valuation and a target exit timeline. So it's as good as this another business already that you are scheduling for and planning for. On top of your current running business, treat your business like another of your product. Get what I mean? And market it like another of your product because it's ultimately your baby. And once you've done all this, you'll be deemed very prepared for sale or even fundraising. You're ready. I mean, it sometimes may not be 100%, maybe 80% of your plan. So what is fine? At least you show to the investors or the buyers that you are prepared. You're not anybody ad hoc or you're like a gambler, over ad hoc, over a place like firefighting every time. But of course, having said that, don't just build to sell, build to be valuable. Okay? So when I meet more ambitious young entrepreneurs or founders, I will always share with them this one thing. Let the sale of your first business be the capital for your next big venture. I like to
Wow, what
digest
does
a
it
little
mean?
bit.
Can you break it down? Yeah.
Okay. Coincidentally, yesterday I was having a chat with a founder who exited. He is a HR software owner, but he sold the business already. So what happened was he had to work for them for the next 2 years. Then subsequently he so-called semi-retired to take care of the children, family life, and so forth. So after a 2 years break, he approached me again. He said, Jeff, I want to buy. He sold his own company. Now it's cash on hand, right? A couple of millions, right? So now he planned for the family, education fund, everything all set aside. They park aside a certain amount of money for investment purpose. So this time around, he's not going to build from scratch. He's just going to conveniently acquire and then scale. And guess what? What's the next step he's intending for? Build to sell again. let's say, for example, he sold his company for, let's say, 5 million previously. Now, let's say he take out of 5 million, 2 million to acquire a new one. Then he has the experience already, right? Of managing company, building the value, and also running the operation, right? So now with this 2 million immediate kickstart, the company is already worth 2 million. And he's going to build it further. Guess how much more value can he create on top? Probably beyond 5, 10, even 20 million possibly, right? So after which, and let's say 2, 3 years, let's say 3 to 5 years time, he already know how to build. He flip, he sell again. He can probably this time around really retire 100% fully. So this is a different perspective of entrepreneurship.
Okay. So, can I use this description like okay, for those really good entrepreneur, they are like developers. Yeah, they are able to gather investment and sell their project at a premium, right? Whereas others is like come up with the projects, but then hopefully it will sell. And apparently, correct me if I'm wrong, a lot of businesses that come and look for investor when their business are in a very bad shape. Correct?
Majority of cases, I would say at least 70, 80% of cases of, let's say, seeking funds are not sellers. Seeking funds are those who are in really a bad shape because the banks won't lend them. They're over leveraged or they are not worth the value to lend. So what happened is they thought that there are not so smart investors out there. So please, there's one thing I hope that all of y'all will know. If investors were to be able to give you 1 million, take note, his net worth is easily 10 times of that. He cannot be a stupid fella. He's definitely 10 times much smarter than a normal person on the street. So they are always looking for value. Okay? So don't just put a simple word, I'm a unicorn, very conveniently, and think that you can con your way through with a very lousy deck.
Oh, Jeff, I got this question for you. Now, let's go back to a startup entrepreneur. We have a lot of startup looking for, we call it angel investor. Like you mentioned about the unicorn project they have in mind and so on. And we realize that some investors have this kind of mindset where they like to invest in IT especially, right? IT startup kind of things. So they'll invest at 10 IT startup and hopefully one will be their golden goose, and they can recoup all the investment, whatever they have invested on the other 10.
Yeah. Okay, I have heard from an organization that has a association. They are an association that invite angel investors to be members. So I heard from the managing director that this kind of angel investors, I'm not talking about the PE and the VCs yet. I'm talking about the angel group of people. They've already been burned in the last 10 years, basically, from paper level investment projects to possibly potential startups. Yeah, you're right that investors do diversify their investment portfolios and they are just hoping for that maybe 10-20% success, which could amount to maybe 5-10 times, or if you're super lucky, 100 times return. A bit of a gambling mentality. But coming back, not all investors behave as such. Some are more careful, especially if it's their own money, their hard-earned money. So they are not in a hurry to give you the money, to be very honest. Like the gentleman I was having conversation yesterday, the software company boss who sold his company, he asked me a question. He said that, okay, Jeff, the company I'm going to talk to, 60% of the operation are human intensive. So he said, I asked myself this question, do I want to buy into another self-employed business? Or do I want my life easier? So the key is always remember that investors are very strategic guys. They are looking for returns for themselves, the ROI every time. So importantly is you must present the right value for them to consider parking money and trusting you, basically. There are cases that I've heard whereby the business proposal might not be fanciful, might not be very interesting. Maybe 10,000 people are doing it, but the investor invested not in the business but into that person, because this person has tracked, the keyword is tracked credible records. And being very shrewd investors, sometimes they invest into people instead of investing into a business. Like some of my investors friends keep asking me, "Hey Jeff, do you think this guy can talk or not?" You see, huh? When you hear can talk or not, you say, what do you mean by can talk or not? Meaning that when things turn sour, can everybody just sit down very calmly and professionally work things out in a very effective manner and not be like hot-tempered, no integrity, or liars. So it's
So
a
it's
very interesting
something,
insight
it's
for me.
something really, yeah, it's something like Shark Tank, right? So when Shark Tank, all the few investors, right, they will usually look at the founders also, and then whether they can carry themselves, or they'll probably look at their leadership as well, right? To
Yeah, you
lead the
can have a
business
very
to the
good
next stage.
model, but they can't sense that you're a good leader or good founder. They may have their apprehension and they may hold back. Yeah, so take note, investors not just invest into a good model or good business, they also look at the founder and the management team. Let's say founder is okay, but when they look at the management team, it's like, oh my goodness, they will also hold back. They also be scared because you can't expect the investors to be doing the roll up their sleeve to do the work, operation work. They will be just the one doing the supervision and the instructions. So if they feel that the founder okay, but the team is somehow very debatable, they will also hold back, be very worried and scared. Yeah.
Okay, this is very interesting. I think probably I will dig in a little bit deeper. What will be the only advice that you will advise to new startup that they should be focusing if they are looking
Uh,
into getting investor for their projects?
yep, yep. Okay. It is again back to the end in mind, basically. I give you an analogy or a story to better relate to this lah. Okay, an old gentleman passed an old watch to the son, okay, and asked the son sell the watch for me. So the son went to the first outlet, which is a normal shop. He asked how much can this watch fetch me? Oh, probably $10 because it's an old watch. So the son woke up, go to a watch shop, specialist already, right? Well, maybe I can give you $100. Okay. Then the son moved on to the third shop, which is an antique shop. The antique owner probably take a look at watch. Wow, this is old model, rare to find, blah, blah, blah. Probably give you $1,000 for it. So coming back, if you are in business, be it you're serving an end buying customers or you're selling your company, be very sure and strategic of who will pay or give you the money. In Chinese saying, 谁来买单? If you go to that first shop, $10 only, they say, wow, bloody hell, the guy don't appreciate my business, blah, 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 blah. But because you went to the wrong guy. So you must know that in terms of valuation, many people ask me, Jeff, do I need to go to an accounting firm or whatever to get my valuation report done so that I know my valuation, blah, blah, blah. But the key is valuation in business buy sell per se. It has nothing to do with your report. Report is just a reference guide, it's okay. But ultimately, who determines your value? Let's say you buy a property, who determines the value of the property? The bank can give a valuation, but ultimately it's the extra or the more to be willing to pay is the buyer himself. How much I'm willing to pay for. So ultimately, is if you're in business serving an end customer or going to sell a company, always be very clear who you want people to buy your business from or buy a product from. Because your targeted audience is the one who will truly know your value. Okay? This is marketing 101 lah. Segmentation, target audience, the profile that you prefer, that you want to serve or sell to, basically. So most people probably conveniently forgot about that. And they serve or they sell to someone that is not of the right profile, and then they complain about it that people don't appreciate their product or services or even their company.
Okay, now, talking about SME again, now, some SME, we know that they are doing well at this point of time. And why would they want to accept any M&A proposal if
Right.
they are at a stage of growth and expansion? Because
Good.
you know what I mean? I don't need
Good
money
question.
coming
Valid.
in.
Very
Mhm.
valid. I will share with you an example after I explain a little bit
Mhm.
about the strategic reasoning. So basically, why should they consider probably going through a M&A when they're doing well, right? Ultimately, we are business people. We are here to gain. So it's ultimately for strategic leverage purpose. Okay, what do you mean by that? Growth and expansion comes with risk. Okay, and sometimes growth can be beyond the founder's capability or competency in terms of two things. One, capital or resources can be drained very quickly exponentially because you're growing very rapidly. Okay, and up to a cent, you can't even borrow the enough money that you want, for example. Two, lacking or gaps will enlarge when you grow. Okay, so because of these two factors, if you will be able to merge with a stronger party who have the right capital and right resources, it's of good leverage to you. Instead of I have to exit and sell my company away, it can still continue basically with a arranged and this negotiated form of a partnership sharing. So smart founders always sell at their strength, not when they are at distress. And what are the possible strategic reasons for such leverage? There are maybe at least 5 of them that I'll share now. One, okay, capital acceleration. What do you mean by that? A software founder, 20 million revenue turnover, he told me, Jeff, last 20 years, I've been financing my own company with my own money. I never borrowed from the bank at all, which I say, fantastic, very good. But he said, now, to scale the business to the next level, he needs external funding already. But he's not willing to take the risk of borrowing $2-digit million loan, which is very risky for him because he mentioned his family all taken care of, he's very comfortable, house, everything paid for. So he's not willing to take that kind of financial risk. So my proposal to him is, boss, let my buyer, the big boy, which is worth billions in terms of valuation, to become your backer. Let them take over you. You continue to run operation. And if you were to borrow from the bank is not going to judge your personal credibility anymore. They will judge based on your big boss behind you, the billion-dollar valuation company. And by that time, you can access even more borrowed funds. So
So,
that's
Jeff,
for capital
I
acceleration.
actually talked to a couple of business owner in the main concern of why they are not willing to take on M&A proposal. One key reason mainly because they are worried about their authority that be diluted along the way because they can't be the one who call the shot and make the decisions.
Yeah. Okay. Let's put it this way. In business, it's about give and take. Let's say this party has certain lacking and they require the resources, network, or capital from the other party. There must be something that you must be willing to let go. Of course, one way to so-called recover back your control and authority is to go for this thing called debt equity arrangement, meaning that you don't immediately sell away your shares. You exchange capital for a debt that has an option for the investors to turn into equity. For that, you might be able to retain some control because it's not full equity exit yet. You get what I mean? So it's about your arrangement and your negotiation. Ultimately, sorry to say, if you lack of something, you must give the other party something before an exchange can happen. There's no free meal on this planet, to be very honest. So it's not about worry about loss of control or autonomy. It's about how do you strategically manage this transition process of your lacking in terms of capital or resources. Okay, so that's for capital acceleration. Now, two, ecosystem partnership for synergy. That's another strategic reason why a company is doing well, they can consider. I give you one very good example. Have you heard of a company called Gojek from Indonesia?
Mm-hmm.
It's a hail riding company, right? Have you heard of Tokopedia, also from Indonesia? It's the largest e-commerce platform in Indonesia. So these two companies in year 2021, they merged to become Go2. And guess what is their valuation? They become the largest digital ecosystem in Indonesia. And this is an $18 billion merger aiming to dominate ride-hailing, e-commerce, and also financial services with combined gross transaction value of 22 billion back in 2020. So this is about beyond 1 plus 1 equals to 2. It's 1 plus 1 equals probably to 10 already. So that's ecosystem partnership for synergy. Others, I won't go into detail, will be like maybe for vertical or horizontal integration. Like I'm a factory, you're a supplier. For resources consolidation, there are others who are like access to distribution network, to acquire talent, or to acquire certain systems that we don't have yet. Finally, is basically I don't want to take so much risk in my growth. I want certain risk transfer through the M&A process. Yeah. So these are the 5 key reasons why a company doing well can consider going through an M&A process. Yeah, of
Okay, so
course.
is there any company that are doing well yet is not attractive to investor?
There are
I think
definitely
there are a lot.
companies that are doing well, probably not sunset, but they can't attract investments. There are definitely due to probably the MASSIVE framework or checklist. Either one lacking, everything good, but the team shows non-aligned signs, not very very scared, or the founder is not somebody you can talk to nicely. For example, many reasons. Basically, you can fall back to the massive framework to do a checklist to determine, rather than to guess, is it because you don't have enough staff, you don't have quality? These are don't go into fragmented, disorganized train of thought. Just follow my massive framework. It will guide you very strategically, step by step.
So Jeff, based on your experience, right, out of 10 SMEs, how many will actually is like open for M&A kind of thing?
Oh, M&A. Okay. Basically, I don't have the maybe encounter of younger people. Majority of those that are hoping to so-called sell or even acquire are people in majority lah, in probably 50 plus and above in the age, for example. And this group, likelihood there are high chance for retirement or in a mood for semi-retirement already. So if some of this group of people, probably I'll have a quick, very rough guess lah. More than 50% will be considering for M&A. But if some younger guys, probably they are too early. They may be only willing to go through M&A if there is a subsequent bigger gain. Like for example, to go for IPO or to be part, even as a small part, they're also willing to go for the IPO process, for example. Yeah.
I do reckon about your explanation on probably 50, 60 and above. They are facing some legacy, succession issue where they can't find someone to take over the business and so on. That's why they look into the M&A kind of a proposal. And since the company is doing well, so why not? Yeah. But however, these 2 years I actually run into quite a few young entrepreneurs have a different mindset where they were thinking about, oh, I come up to start this company and I want to sell it at 3 to 5 years time. Kind of
Yep.
things. Not the kind of a legacy mindset that I have. We intend to run the company for a couple of decades kind of stuff. So 3 to 5 years, I sell the company, I build another one again, I sell again. So
Yep.
I saw the trend, okay, these
Yes.
days about this.
If you're right, they are probably more well informed with the information age lah. And then there are a lot of successful story like Elon Musk. You know, Elon Musk sold PayPal first, right? And
Mm-mm.
then he got his first capital. Then from there on, he rolled into the next bigger ventures, and now he's like wow, one of the world's most valuable person. So they are strategically on the a good path. I'll put this way, than to build a so-called legacy. Because nowadays you see, especially in Singapore, is how many 50, 100-year-old brands still around? Thailand, you still may find 100-year-old brands still looking around. But in Singapore, it's very stressful, I put it this way, and very heavy pressure for an entrepreneur to be able to sustain a business for maybe second, third, fourth, fifth generation and so forth. So it is very strategic and good for these younger guys to realize this that, hey, business is not meant just for legacy. It's meant for them to raise their first fund, for example, because they're still young, they can continue next venture without having to go through the route of going through investor, losing their autonomy, losing control, and so forth. So if you have the capability, build one that's valuable, sell it, get the proceeds, take the proceed, rest a little bit, go out to the world. I usually ask them, go out and travel the world before you come back to determine your next venture.
Okay, I'm not discouraging on this entrepreneur mindset and so on. However, I did see quite a high percentage of failure when they have this mindset in the first place because they are not looking into what their service and product can help to solve problem, but it's more on the monetary value they are looking into gaining
Yep.
by end of the day.
Yep. Like what I mentioned earlier, right? Don't build to sell, build to be valuable. That's the focus that they should be on. Of course, you can set an ultimate like 3 years timeline, 5 years timeline. I want to exit. Probably there are stories that I can't mention the name again. There's this young entrepreneur. He told it was a workshop that we attended, a seminar. So he shared with the whole crowd. He said he built his business purposely to disrupt the market leader so that they will buy him over, and he succeeded. You get what I mean? So, but having said that, that means this guy understand value. He's not building for the sake of monetary quick exit. So he knows that the industry buyer won't pay if it doesn't have a value at all, even if it's pure disruption to their business, for example. So ultimately, yeah, it's on a strategic mindset to say I want to sell in 3 to 5 years time. But the more strategic so-called philosophy or context is don't build just to sell, build to be valuable. Maybe you don't need to sell much earlier because you may attract investor instead of having to sell. When investors see that, hey, you got value, I don't mind be a sleeping partner. This is a capital, go run the business for me. You get what I mean? So it's to be sorry to use the word to be overly ambitious or to be too greedy when you're not ready, it's not going to be helpful for anybody.
Okay, now we talked about leadership at the previous question, and we also talked about leadership in our previous podcast session as well. And we still want to ask the question about leadership on you. And I want to find out is that okay, company invested or acquisition any SME that is profitable, they will look at the leadership in the first place, correct? But when they are buying over or they want to invest, they actually invest in the whole team that have been built. So what kind of leadership are we talking about for investor looking at if they have the interest in buying over or invest in that particular company? I believe that domination kind of leadership probably is not what investors are looking for. Am I right?
Okay. So you're just to clarify, you're referring to the investors buying over or taking over a company, and what kind of leadership style or characteristics are they looking for in the founder or the management team, right?
Correct.
Well, let's put it this way. If let's say, like what you just mentioned, it's an autocratic kind of leader, still running the autocratic way, means I say you do, full stop. Uh, well, unless this is a chaotic industry or era, yeah, that may be valid. Okay, it's situational basically, right? But if let's say your business is at what we call the growth stage or the mature stage already, autocratic leadership may not work the best because this is a time whereby you need to be at least grooming or developing a good management team to be managing majority part of the operations.
So that
If
you
you're
can go on
still
autopilot.
Yeah, so that they can slowly progress to what we call autopilot. But if you're still the guy who is always poking into the micro details, breathing behind the neck of your employees or your staff when you're at the growth or mature stage, it will be very irritating for your team member, to be very honest. And they cannot perform because they are being supervised and controlled. So this is a bit this is a what you call growth stage is a stage for your team to grow, to progress, to flourish. So it has to be a stage whereby you're more of a strategic leader, uh, assuming the role of a mentor or even a coach to guide them to progress better as the next generation leader. Then your investor will see, wow, they're very good. You're preparing for your succession. Right. Because investors don't want to rely on you to run the business forever. Because after acquisition, they are the new owner. They want it to be sustainable and scalable. So you, as the previous founder, you will go one day, be it because of age or whatever. So key now is they want to see that you have the kind of capability, or you might be already woken up lah. Let's put it this way lah. That hey, in the past I was autocratic. I was very you say I do kind of approach. But now maybe business is already mature enough. We've grown big enough. The next is about retention and succession. Okay, we got a fairly good system already. You have to become what I call the cultural leader. Because if you're talking about organization that's been around for some time, yet they are cultureless, this organization will be a very boring and tasteless place to be working for. And what happened? Employees will start leaving after they gotten what they want.
Yeah, it's inevitable. And usually when we talk about leadership, right, the culture is the next thing that comes in.
Yes. The older generations may not understand this, but some happen to chance upon it by bringing, let's say for Asian kind of businesses, they'll bring some family related culture into the company and say this is the family company, for example, that we've created a second home for everybody. Da, da, da. So but the younger generation may not realize this because they are all influenced and grew up through the tech and IT era, very digital. We quite considered cold lah. So the human element part, it is probably a bit lacking nowadays. That more strategies are looking back into this aspect of cultural establishment, for example. And it's not easy. It's not easy. And who is the best person to inculcate all this? The leader or the founder himself. You can't rely on a team or a general manager to do that because they are not the founder. They can't inculcate the culture or the spirit of the company. Yeah.
So you do agree that the leadership probably is a key thing of that affected or limited the company growth.
Okay, having said that, just with a pinch of salt, you see, MNCs, they have the luxury to change the right leader to the right kind of growth stage of a business cycle, for example. Because let's say for this transformation, then they bring in a transformational kind of leader to take over from the previous guy who probably grew already the business. And then now you need a different kind of leader. They can change the CEO or the MD. But for SME, we don't have that kind of luxury. It's a one man who's expected to be the chameleon. Let's say there are 4 or 5 stages of growth in a business. So this chameleon has to progressively transform, which is not common and it's not easy. It's not easy. So those who have a higher level of awareness will realize that, hey, I'm not the right one, although I'm the founder. Let me bring the other guy or attract the other more capable guy who is suitable for this current era of the company to take over me. Then I guide this person to go and execute. So yeah. So yes, leadership, let's put it this way, it's very rare to be able to find a leader who is 360-degree and like a chameleon can keep changing. Not easy. Not easy. Yeah. But at least
Totally agree.
if let's say the investor found that, hey, he did bring in some talents to take over and so-called replace the lacking in terms of leadership, then the investors will know that this guy is strategic. Yeah, he knows that he don't have ego. He knows there's a gap. It has to be replaced. It has to be replaced. So
Apparently, I think that a lot of business owners do have very high ego. So, okay, this is something that it's just not just
yeah, I
Singapore
mean, the
alone.
people
I think
on
it's a
the
worldwide,
top,
it's a worldwide thing.
even,
Yeah, it's a
yeah,
worldwide thing. Yes.
correct.
And like we always say, like, right, don't fight the war alone. All right. So you have to fight in a group so that you can achieve more. You know, the boss and the leader of the company are over the ceiling of it.
Yep.
So if you want to break through the ceiling, you need to have someone of a better skill and knowledge than you are, right?
Yes. Now with a fractional so-called C-suite
Hmm.
availability, I think it's going to make it much easier for the SME to afford senior and experienced people to take over at different phases of the business. Rather
Yeah,
than say
totally.
I bring in a consultant, forever retainer, or I hire a C-suite person to forever be employee. I think the fractional kind of arrangement will become more attractive and more conducive for companies to grow from now on.
Yeah, totally agree. Now, looking ahead, do you think there will be more uncertainty for many SME are going to face and why?
Okay, this era is be it politically or technologically, it's an era of high non-stability. So the keyword now is adaptability, basically. How well do you adapt to the fast changes? Um, you see, industrial revolution started in the 17th century, and then you have the technological revolution in the 18th century to the early 19th century. Then you progress to the IT era, digital information age in back in the 60s, 70s, and 2000s, for example. This era is again another, they call it Industry 4.0 lah, which is the intelligence era, catalyzed by big data, artificial intelligence, and IoT, Internet of Things. Now, all this will be forcing us to shift and transform. It's like water. You go against water, you die. So you have to adapt accordingly. It's an era whereby we just are comfortable with, internet information I retrieve, I read the data, I know what to do already. It's not about how you use the latest AI or technology using the machines to, based on the big data that has been collected, again by the machines. In the past, it's too tedious for human to do that. But now it's so easy, right? Within 5 seconds, you can get whatever you want already. And get the machine to execute, at least digitally, what you want to achieve. And that could save you probably in terms of time and money. And it's going to be an era whereby there's blurred line between physical, digital, and biological. I know Elon Musk has been talking about planting chips into the brain for those who are paralyzed and handicapped, and now they can walk and so forth, or the blind they can see. So it's a very exciting era, but of course there's definitely a lot of what we call uncertainties. But in Chinese saying lah, 危机 whenever there's a certain
Crisis.
level of uncertainty, you will have opportunities. But what they are, I think there's a lot lah. It's up to your imagination basically for us to go and poke and find our niche to work into. Of course, some opportunities are much earlier to be tapped onto, whereas some probably will develop gradually for us to spot and then for us to enter into. So depending on who you are you an early adopter, an innovator, or are you a laggard, or are you a follower? So you just go for the opportunities accordingly. But don't just sit there and do nothing. I just quote you a very interesting example. We were discussing this topic about AI with another. I was discussing with an engineer. I'm not an engineer, but this other gentleman is an engineer. So I asked him, so how are you using, since you're an engineer better than me, right? So his reply was, I'm not going to use AI. I said, you're an engineer. I said, why? Because you will learn from me. I say, but I mean, how are you able to fight the other millions of engineers who are already using it? So if I'm sorry, I feel like I'm nobody compared to 10,000, 10 million other people or consultants out there. So for me, it's well, if I can't go against you, I flow with you. I flow with you and leverage as much as I can. But I have to work hard on adapting to gain what we want. And along the way, help others achieve what they want, basically. Then we have value.
So aside from the trend of AI, what other trend that you will see that is profitable?
Profitable. Wow. I think this is an era whereby a lot of people rumor there'll be one man billionaire, be it you're a teenager, 13 years old or not. One man show billionaire business.
Do you believe it's possible?
I believe it's possible with agentic AI coming up. Yeah, of course now they may hallucinate still lah. But if you look at the ChatGPT maybe 3 years ago or 4 years ago versus ChatGPT now, or even Gemini, draw something, stickman, and then it looks so ugly that, and now wow, live real picture or photo. So it's definitely possible, but it's a matter of time. It's a matter of time that it gets more better and more towards perfection. So you talk about opportunity. Let's go into this area whereby most people think of it negatively, retrenchment. When it become redundant because of AI, you are now it's already happening, it's already on news, nothing new, right? Tech companies are all offloading people, big brands, I don't mention name, offloading by the thousands. And what will happen to these offloaded talents? There's two things that will happen. One, a surge in terms of solopreneurs or entrepreneurs, for sure. Okay? Then any opportunities revolving around them will happen. Two, the more senior offloaded members will become the fractional C-suites at a very affordable level. So this one opportunity that we, let's say you're working for somebody, don't be too sad. Yeah, maybe geared towards this direction. Then of course there's Web 3.0, right? Whereby there's a lot of talks about digital assets and tokenizations. I'm not saying go and create your own crypto or whatever, but start getting interested in digital asset creation. Be it in you are musically talented, or you have a fantastic idea visually or whatever, or you have a concept or a thought leadership kind of thing. Your concept you want to share in terms of article, podcast, or whatever. Yeah, this can subsequently turn into digital assets, and of course with AI search engine or coming up, there's this thing no longer SEO. It's going to be called what they call it, answer engine optimization, AEO, or they call it generative engine optimization.
Yeah, it's like LLMO, something like that. Large language model optimization.
Large language model, but they generally call it AEO, or previously I heard is GEO, generative engine optimization. So if you have good content back to the digital asset, good content, good information, you have a maybe a blog page, a website, or a YouTube video, or whatever that you already recorded and then captured, you will become popular through this search engine because you are deemed credible by them subsequently. And of course,
Jeff, I got one question for you before we run out of time. Now, personally, what is your preference of industry that you would like to work on and help to gather investor for them?
Okay, One is actually back to the opportunity, 3D printing related kind of company. You see nowadays the 3D printers, right, are getting more and more affordable, and the output is more and more amazing. And now you don't need to even know how to do 3D modeling. You just need to use an app, take a video around it, it will replicate for you immediately. So this will totally change anything to do with product and product marketing. And you don't have to build a $10 million factories anymore to start your own brand and your own product range. So you just have to be creative. So this is one aspect which is AI triggered definitely of business that I'm very interested to take a look at. It's called this is called mass customization, okay? Which is in the past, if you want customization, you will go all the way to China to order in a bigger quantity, then wait for the ship to come, ship delay, you die lah. You know, your customers will kill you, you miss the deadline. Blah, blah, blah. Now your printer is right smack at your hall or your home. So just, oh, what do you want? 10 pieces, 100 pieces, print, basically. So this one kind of business that I'll be very interested to take a look at. It's something like, I don't know how old you are. Back in the days whereby at Queensway Shopping Centre, we go and print t-shirt. It's that era now. It's going to be that era now. And it's happening already in Singapore. There are small people who rent a small space, and there are 3D printing machines doing that already. Okay, so that's one aspect. And you don't only print products, plastics, you can print metal, you can even print food nowadays. So fabrics, of course, yeah, you can print fabrics. So this one aspect. Other aspects that you asked me that is more worth to be invested into or more profitable is something that is ecosystem related, that there's a potential to do what GoTo Group, Gojek and Tokopedia has created. That is not just a very boring one-way traffic kind of business, but it's more like a conducive environment, a bit like Lululemon, for example. They created a community, an ecosystem, and they grew from there. If you it has got to do with culture also, basically. Not just a culture within a team, but culture for the customers or consumer. This kind of business is definitely more attractive in terms of value to look at. Why? Culture cannot be easily copied by another competitor. It is what we call intangible in terms of valuation. Another kind of business that we are looking at is probably things that are already integrated in terms of supply chain. Give you an example, there is a cafe that I was talking to who intend to raise fund. So what happened was we connected them to an investor from China who owns tea plantations. And they also sell a certain kind of Chinese alcohol. So they are looking for channels, basically. So this cafe already have a channel, about 4 or 5 outlets in Singapore, a certain level of reputation, and the model is built to be replicable. Then upward, you have this so-called supplier kind of business who want to integrate with you. So this kind of arrangement possibility is what we look forward to also. That you have not yet been invested into, but you probably have created certain kind of integration, upward or downwards, possibly. We are definitely interested to take a look at you. So if you notice, it's beyond just a one-way or one-trick pony kind of businesses. We are looking for something that is what we call expansive, as a EXPANSIVE, means expandable, and there's flexibility to maneuver and recreate, basically, so that we are future ready.
So, Jeff, I actually have just one last question for you. Is that if there's only one piece of advice, right, that you can give to SME owners, what would that be?
Well, I think it's still one, of course, yeah, like what I mentioned, have end in mind who's going to be your investors, buyers, or your end customers, profile them, and reverse engineer to serve them well. to give them the right value that they're expecting. But what I've encountered in my last 16 years in working directly with SME bosses is systemization. Majority of the businesses, not just in Singapore, even globally,
Globally.
globally, like even last year I've been to Thailand a lot. I've noticed they are running businesses like firefighting every day, and things are very fragmented. And worst case, department level or process level, they don't communicate well. So you can be you have good customers, good value, good profit, good team, but if you're not a system builder, okay, the leader is not a good system builder, then your business is in trouble. You will not be able to scale and subsequently be sustainable. So you have to be a good system builder. By system builder, I don't mean digitally or IT aspect. I mean just a simple manual flow. It's good enough already. Then subsequently bring in the IT engineers in to digitalize for you. If you don't mind, I've met a lot of cases whereby I've met bosses who say they invested 100K, 50K into IT systems. But
then it becomes an elephant, a white elephant.
You're right. And then I asked them, so what happened to the new system? Oh, chuck aside, we go back and use our 50-year-old system. So it's very sad. It's very sad. But not trying to be disrespectful. IT consultants definitely have their strength and their knowledge experience, but they do not have the domain knowledge of your industry or your business. So you can't expect them, all of them. There are some who are very good, of course, but you can't expect all IT engineers to be very good, I would say, a consultant for your business. You ultimately still be the best. So if let's say you're not a good logical person who do things very structured in a very structured manner, you can talk to other consultants who are good at scaling and growing businesses to guide you, to systematize your business so that you can ultimately create an autopilot, be it a full or semi-run business. Then your business will have much better value and your life will become much easier. And like what you say, you can go for your 6 months holiday without having to worry too much. Yeah, I'm not asking you must sell. At least you build a valuable model that's already systemized and semi-autopilot running, and life will be much easier for everybody lah.
Okay, very insightful sharing today, I would say. I'll do a quick summary and do let me know, Jeffrey, if I miss out any point, right? So for any startup or SME owner this year who are looking for a M&A opportunity, probably go to rethink again your business idea and scalability of the market size. Yeah. At the same time, I think that entry level is also very important. Let's say if you are of a very low entry level businesses, then probably many investors may not keen to invest at all because there'll be too much competition in a very short period of times. Right? But last but not least, I think that the possibility with collaboration with other industry with your service and product, which is also very important because they actually increase a lot of opportunity, not just within whatever they are serving right now, but other aspect of the market that probably can work with and work along. Yeah. So is there any other thing that you'd like to add on, Jeffrey?
Well, back to the question, there's no business that's too small, to be frank. Like what I say, inherent value. You can be small and you can be a new startup, but if you have a value that aligns with the investor or buyers that just come by, right, you'll be valuable. But it's just the valuation quantum, how much an absolute amount they're willing to part with you, that's all. Yeah.
Where can people get your massive framework actually? Yeah, I think that pretty much summarizes everything, right?
Currently, I'm actually keeping it as my secret recipe for people who approach me. Then I will share the deeper detail with you because it's something that I have come up with over the last 16 years of working with SME and my 10 add on to my 10 plus year of corporate experience. So I believe it's valuable. And I believe valuable things should have a value to it. So what we will do is, well, I can now, of course, I already shared a massive acronym for you to have a quick checklist. If you like to go deeper and to go more advanced on top of that, definitely you can have a chit chat with me and we can see what we can arrange. The way I work is I don't take a fixed fee or a huge amount from SME owners because I know cash flow is an issue for most SME. My fee approach is very flexible. I'll take what we call a minimal retainer, okay? Can be discussed for mutual commitment lah. Because it can't be free ma. Plus a certain percentage of the revenue from the company. And my job is to keep growing you, not just in terms of revenue, but also in terms of profit. So it's a fair exchange, basically. So those who are very keen on not just a massive model, I a lot under my wings. Very, plenty.
So where can people find you then?
Okay, I think it's very simple. Right now on the screen,
QR code.
it already has a QR code and the number stated over there. So it's saying our job. We don't have to put his contact by the end of the show.
Or Ben, then you connect them to me, lor. I'm fine. Yeah. Just scan my QR code or my number, WhatsApp away. But take note, don't call me using because I don't answer unknown call nowadays because of scammers lah. Just text me, put me on WhatsApp. Yeah, then we'll communicate from there. Yeah.
Cool.
Okay. Yeah, I'm always
Okay.
okay for a good discussion.
Okay, with that, I think that's about that about our show. This year, we hope that I wish everyone to have a very good year of the horse. Then at the same time, the progress on there. Do remember, plan ahead before you decided to work on M&A. Yeah. Okay. But last but not least, do remember to subscribe to our podcast. Anyway, it's free and we hope you can share around so that you can benefit more business owner or startup. So with that, have a nice day, everyone. Thank you very much.
Thank you, Jeffrey.
Thank you, everyone. Happy New Year.
Happy New Year. 恭喜发财.